Welcome to the latest Motley Fool scoreboard. I'm on Unchockable, and we've got longtime fools, Lou Whiteman and Matt Frankel, giving a 1 to 10 rating to what I'd call the largest non-mega bank. It's Moneyball Rec US Bancorp, ticker symbol USB. Rate the strength of US Bank's business first, including factors like industry and competition. 10 is invincible, a 1 is hopeless. Both of you have 8s, Matt.
Yeah, historically, U.S. Bank is one of the best run and most financially sound banks in the world. Out of the top 10 financial institutions in the U.S., there was one that stayed profitable through the entire financial crisis. It was U.S. Bank. It is a regional bank, but it's also a too big to fail bank or a systemically important financial institution. So it kind of sits in a weird spot. 40% of its revenues from fee income, which is a good thing. That's like credit card fees, investment management fees, things like that. However, one thing that's kind of a little red flag to me is U.S. Bank decided to raise its credit loss provision in the third quarter, and that's in contrast to all the big banks.
Yeah, that was interesting. But I was echoing what Matt said. They have earned the reputation as one of the best run banks. Banking done right is the simplest business in the world. You're buying and selling money. There's no friction. Yet historically, some have done it very well and some haven't done it very well. This is a bank that does it really well. Love the product mix here. I love the sort of non-New York bank side of it, the mix of retail and commercial at scale with that large mortgage business. They're conservative. They get it right. And to me, yeah, solid 8.
8 seems pretty perfect for US Bank. It's always just a very solid player. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Lose it a 7, Matt, you're at an 8 again.
Yeah, and if you ask me in another year or two, it might change because their CEO's new. And I hate going first because I have to pronounce names, and I'm probably going to get this one wrong. Ganjan Kadia, I think I said that correctly. She became CEO in April. Before that, she was the bank's president. She's been with the bank since 2016, was with a few other institutions before that in leadership roles like State Street. There's no reason to think she's not the right choice. And U.S. Bank has a history of picking good leaders. So I'm giving her the benefit of the doubt, but it remains to be seen, really.
Yeah, no, and I'm only at a 7 because she's so new. But yeah, Kadia, before she was in with the bank, she was helping banks with best practices. So she knows this industry. And as Matt said, this is not a bank that takes this lightly. Her predecessor was with the bank for 4 decades. He replaced Richard Davis, who I knew back in the day who kind of built this thing. Great bloodlines, hiring within. Nothing other than, I guess she does need time to prove herself. But yeah, strong choice, solid leader.
For financials, a 10 is a fortress, a 1 is yikes. Lose it an 8. This time, Matt, you're at a 7.
Yeah, it's a highly profitable institution. Their return on assets is significantly above the industry average, for example. Net interest margin shows improvement. It's great credit quality. Their efficiency ratio improved by 400 basis points in the last 2 years. Growth is really slow compared to some of these other banks on our radar. Deposits were roughly flat year over year. Loans grew by about 1%. And there are a lot of commercial loans on the balance sheet, which is kind of a red flag for me as well.
I would argue the slow growth in this economy is actually why I'm at an 8 instead of a 7. I think this is the time when a well-run bank is cautious. Look, they're forecasting 200 basis points of operating leverage improvement just thanks to this fee income momentum that Matt mentioned. They are a great producer of fees, of basically non-lending based income. I'll ding them a bit just because you actually have to pay a price over book value, and you only get you do get a sub 4% dividend yield, which, look, in banking, in most places is great, but look, a lot to like, just a solid operator, boring, but that's good.
Let's see how good, Lou. Let's talk valuation. How well will U.S. Bank's stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
This is a market beater from here. It's not a rocket ship. So I'm at 10 to 15%. Factoring in that dividend, I think we could be at the upper edge towards 15% over the next few years. For safety, I'm at 7. Banking is not without risk. But again, this is a company that stands out in terms of just being drama-free and doing its job. It's a pretty strong sleep at night stock for me.
Yeah, I gave it a 10 to 15% as well. I think it's a market perform over the long run, but a market beater over the next 5 years. I think we're entering a generally strong environment for banks. Obviously, it's a more regulatory-friendly environment than we've had in previous years. It's interest rates are coming down, which should help with deposit costs. A good portion of their loans are fixed rate. But banking is at the mercy of the economy. There's a lot that can go wrong, with stock price wise, not just business wise, which we saw in 2023. Their bank was fine, but the regional banking drama, didn't spare their stock price. And over a 5-year period, there's a lot of uncertainty they're dealing with. So that's why I gave it a 6 for safety.
Thanks to both Matt and to Lou. They've given U.S. Bank a strong overall score of 7.4 out of 10. In terms of bigger banks, Matt prefers Bank of America as a top it, and Lou prefers Truist. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up, we'll go much smaller and talk about a regional bank, Bank OZK. Till then, Fool on. This is like calling someone Reginald when you're used to Reggie. I'm like, U.S. Bancorp.